Sent us this really fascinating stack of sources on short-term crypto opportunities. And our mission today, really, is to equip you, the listener, with a solid framework to navigate this stuff. We're picturing like a $5,000 budget, right, and a high tolerance for risk. We're diving into these aggressive, like really fast crypto trades. Think of this deep dive as your shortcut.
Yeah.
Getting you well-informed, pulling out the key nuggets from all this material.
Exactly. And it is a high-stakes playground, no doubt about it. The potential rewards, yeah, they can be significant. But the risks are right there alongside them. So our goal is to give you that robust framework, not just for spotting opportunities, but, and this is critical, for managing the risk, even when you're being aggressive. Because, this market moves incredibly fast. So having a structured approach, it's absolutely vital.
Right. So starting with that $5,000, that willingness to embrace risk, we're really focusing in on coins that are kind of built for these quick plays, these high reward scenarios. Our sources really hammer home focusing on assets with like strong recent momentum, or maybe some speculative buzz around them, or something about to happen, a catalyst that could just ignite the price.
That's the idea. And you're looking across a pretty wide range of things here. You've got DeFi projects, decentralized finance, gaming tokens, AI coins are big right now, even infrastructure projects. And yeah, of course, the meme coins, the real Wild West sometimes. The core strategy is pretty much leveraging that sudden volatility, riding those hype cycles, quick in, quick out. But, and I know I sound like a broken record, it always comes back to managing that risk carefully, always.
Yeah, digging through this, what struck me was it seems chaotic, right? But the sources actually lay out a surprisingly structured way to look at it, like a roadmap for vetting these things. They give us, 6 key parameters?
Yeah.
A toolkit, basically, for understanding what drives these fast price moves and how you can apply that knowledge. So where do we start? What's the first pillar?
No, okay. First up, and this is absolutely fundamental for short-term trading volume and volatility. Think of high 24-hour volume as like the lifeblood. It ensures you can actually get in and out easily without slippage.
Slippage. That's when the price moves against you while you're trying to trade.
Right.
Because there aren't enough buyers or sellers.
Precisely. So high volume means good liquidity, your exit ramp, as you put it earlier, and volatility. Well, those big swings, 10% or more in a day, that's actually how short-term traders make their money. But, and here's the catch, it's a double-edged sword. An asset might shoot up 100% and then drop 50% in the same day. It happens. So that demands real discipline, using stop losses religiously.
Those automatic sell orders to limit losses.
Exactly. And precise position sizing. Meaning, with your $5,000, you're only putting a small, calculated chunk into any single high-risk bet, like Pudgy Penguins, PNG. Recently, its 24-hour volume was something like 65% of its entire market cap.
65% in one day.
That screams, this thing is being actively traded, it's swingy, it's volatile.
Okay, that makes total sense. High volume, high volatility, got it. So beyond the numbers, what about the, the story, the buzz? Our sources really highlighted how much crypto, especially short-term, is driven by narrative and hype cycle.
Oh, it's huge, absolute massive in crypto. Strong narratives like, remember DeFi summer, or when AI tokens went nuts because AI was suddenly everywhere? These things attract floods of speculators. The classic strategy here is often that old saying, buy the rumor, sell the news.
Right. Get in before the announcement, get out when it happens.
Pretty much. Hype builds, reaches a fever pitch, and then poof, it can fade just as fast. And what's really interesting, sometimes even kind of silly things can trigger it. Like Elon Musk tweeting about Dogecoin. That sent DOGE up, 27% in minutes?
Just from a tweet.
Yep, because it fit the meme, the narrative of the moment. So you need to sort of gauge when that narrative is peaking, getting saturated, because that's often when the smart money looks for the exit.
It really does sound like the Wild West sometimes, spotting the next viral joke, but with real money. Okay, so narrative matters. What about the nuts and bolts of the coin itself? Like, how many are there? That brings us to tokenomics and supply mechanics.
Absolutely crucial. You got to look at the total supply of tokens and, maybe even more importantly, the emission schedule, how new tokens come into circulation, because new supply hitting the market, like token unlocks for the team or early VCs, that can be really bearish.
Bearish meaning bad for the price.
Yeah.
Because people are selling.
Exactly. Think about it. These folks got in super early, maybe paid fractions of a cent. When their tokens unlock, they often want to cash them out, take profits. That selling pressure can definitely push the price down or at least increase volatility.
Okay, so unlocks, potential downward pressure. Good to know. Is it always bad, though? Or for short-term stuff, or are we just looking for scarcity?
That's a great point. For quick trades, yeah, generally you want to steer clear of trading right before a big unlock event. On the flip side, things like token burns, where they permanently remove tokens from supply or buyback mechanisms, those create positive pressure. Less supply, potentially more value per token. And that ratio, circulating supply versus total supply, that tells you about dilution risk down the line. Some coins have a fixed, very low cap, like Yearn Finance, YFI, only about 36,000 tokens. ever.
Wow, that's tiny.
Right. So with something like that, even small increases in demand can make the price react very sharply because there's just not much supply out there. Understanding this helps you decide, like, okay, maybe I don't want to hold this long just before a massive chunk of tokens unlocks.
Okay, so supply dynamics, definitely non-negotiable to understand. But let's say the tokenomics look decent. How do we actually time our entry and exit? The sources talked about visual cues, right? The charts, technical chart patterns.
Yeah, and look, you don't need to become a full-on technical analysis guru overnight, but understanding some basics, super helpful. Key levels like support, where the price tends to stop falling, and resistance, where it struggles to break higher. That's crucial for timing. And patterns on the chart, like breakouts, where the price pushes through resistance, or triangles suggesting consolidation before a move, they can signal what might happen next. A key thing is volume, again, a breakout on strong volume. Much more believable. And then there are tools, indicators like RSI or Mass CD. They basically measure momentum. They can hint if a coin is maybe overbought, meaning it's run up fast and might be due for a pullback, or oversold, maybe it's dropped hard and could be ready to bounce. Like Eliakai recently had a technical rebound, looked good on the chart, and it was confirmed by a big spike in volume right after breaking a sort of triangular pattern. So if the chart looks amazing, but the RSI is screaming overbought, maybe you pause, or maybe that's your signal to take some profit.
Right, another risk management signal baked in there.
Okay.
Shifting gears a bit, what about the people involved, the crowd? Parameter 5 is social sentiment and influencers. How much does the online buzz really matter?
A lot. An outsized amount, frankly. Social sentiment, what's trending on Twitter, now X, or Reddit, TikTok, YouTube, it's often a leading indicator. If a coin starts buzzing, you often see FOMO kick in, fear of missing out. That drives the price.
So you're looking for what's starting to trend?
Yeah, catching it early can be key. And influencers, they play a massive role. We already mentioned Elon Musk and Doge. A single tweet can cause chaos or euphoria, depending on your position. There's even academic research showing positive social media buzz can correlate with short-term gains. But here's the nuance. When sentiment gets extremely positive, wall-to-wall rocket emojis to the moon everywhere, that can actually be a sign of a short-term top, peak hype. So the idea is to ride that wave, yes, but try not to be the last one holding the bag when the music stops.
Okay, so be early, watch for peak hype, and know when to leave the party.
Got it. And finally, the big picture stuff, regulatory or ecosystem catalysts. These are external forces, yeah.
Exactly. Things outside the specific coin's control, often, like SEC announcements and the U.S. government policy changes, or maybe a blockchain project launching its mainnet, or a hard fork, or even a surprise airdrop. All these things can really move the market or specific coins. It's an extremely news-sensitive space. And you also see these intercoin correlations. Like if one AI coin pumps hard,
other AI coins might follow. Yeah, sometimes they move in sympathy. People look for the next one in that sector. There are tools like CoinMarketCal that try to track upcoming events, but really the key here is just being agile. You have to be ready to adapt when unexpected news hits, because it can completely change the game instantly.
Okay, wow. So we've got the landscape, the high stakes, and this really practical toolkit. Volume and volatility, narrative, tokenomics, charts, sentiment, and catalysts. So how does this actually look when we apply it? Let's take some of the specific coins mentioned in your sources and run them through this filter.
All right, let's do it. First up, Pudgy Penguins, P-I-N-G-U. Trading around, 0.0143, market cap close to $900 million. And the key thing recently, a massive surge, like plus 64% in the last week. So for your $5,000 budget, this definitely hits the high momentum, high liquidity marks.
What's driving it? What are the catalysts in the narrative?
A couple of big things. A partnership with Walmart selling actual toys in thousands of stores with QR codes linking back to a digital thing.
Wow, Walmart. Okay.
Yeah. Plus a Robinhood listing, opening it up to millions of retail traders. And it comes from a popular Ethereum NFT collection, so it already had this huge built-in audience, millions of followers, massive social reach. And remember that volume point. Its 24-hour volume was recently $585 million. Over half its market cap. That's insane liquidity.
So checks the boxes. Narrative, volume, catalysts. What's the catch? The risks.
Well, it's incredibly volatile and speculative, super high risk. It launched much higher, then plunged like 75%, then ripped back up 285% from the lows. Huge swings. Its success is basically tied to keeping that brand momentum going. If the novelty wears off, that's a big risk. It's really described as a meme coin with an NFT twist. So pure hype play, mostly.
Okay, high risk, high reward, driven by hype. Got it. Next up, Floki, F-L-K-I, price is tiny, lots of zeros, 0.000074, market cap around $721 million. Also seen a recent pop, double digits in 24 hours, 25% rebound over the week. This started as a meme coin too, right? Shiba Inu theme.
Yep, the Floki Vikings. They started as a meme, but have invested heavily in marketing, billboards, sports deals, you name it. And they're trying to build some utility, developing a play-to-earn game called Valhalla, an NFT marketplace. trying to be more than just a meme.
How's the volume and liquidity?
Consistently strong, often $50 million, $100 million or more daily volume, available on all the big exchanges, Binance, Coinbase. So easy to trade, but make no mistake, it still trades like a meme coin. Super volatile. 10–30% swings in a day are common. It's also still way down, like 80% from its all-time high. And the supply is enormous, 9.7 trillion tokens.
Trillion, wow.
Yeah. So even with the utility stuff, the big risk is just falling out of the hype spotlight. There are so many meme coins competing for attention. Vigilance is definitely needed here.
Okay, another volatile one, trying to build utility but still trades on hype. Now, switching gears a bit, Hedera, HBR, this one's different. Around $0.15, but a much bigger market cap, $6.3 billion. Top 30 crypto. Feels more substantial.
It is a different beast for sure. HBAR has this unique mix. It's got serious enterprise backing. The governing council includes huge names, Google, IBM, Boeing.
Okay, that's serious credibility.
Right. But it also has a really dedicated retail community. They call themselves the HBR Barians. The price reacts strongly to news about network adoption, new partners. There were rumors late last year about a Ripple partnership. Didn't happen, I think, but the rumor alone sent the price up almost 700%.
100%,
Yeah.
just on a river.
Yeah, shows you how sensitive it is to that kind of news catalyst.
Yeah.
New council members joining is another key catalyst. And liquidity is excellent. $100 million plus daily volume, typically. You can trade large amounts without moving the price too much.
So maybe a bit more stable day-to-day than the meme coins, but still capable of those explosive moves on news.
Exactly. It's more stable, generally, but can get very volatile when big news hits. Main risk, probably over-reliance on that enterprise adoption actually happening and scaling up. If those big use cases don't materialize fast enough, sentiment could definitely turn sour. And it does have a history of sharp pullbacks after those hype peaks. So even here, timing is still really important for short-term plays.
Makes sense. Enterprise-focused, but news-driven volatility. And finally, let's touch on Worldcoin, WLD. The Identity Project, around dividend 89 cents, market cap about $1.5 billion. Sources say it stabilized after a slide, maybe in an accumulation phase. What's the short-term angle here?
Worldcoin is definitely unique. That whole eye-scanning orb thing for identity verification, distributing free WLD tokens.
Yeah, the orb. Pretty sci-fi.
Totally. And it's co-founded by Sam Altman, the OpenAI CEO. That gives it massive visibility, a built-in narrative around AI and identity. Catalysts for WLD would be things like strong sign-up numbers for the World ID, expanding into new countries, getting listed on more exchanges. Any kind of positive news on the regulatory front would be huge too. Trading interest is solid, over $90 million in 24-hour volume, so liquidity is good for your kind of budget. But the risks are significant. Big-time regulatory risk. Privacy concerns are major, and they've had to pause operations in some places.
Right, the privacy angle is controversial.
Very. Plus, like other projects, you've got token unlocks for early investors potentially creating sell pressure down the line. It can sit in these quiet periods, consolidation where the price doesn't do much, and then suddenly break out violently up or down, and it's super sensitive to FUD, fear, uncertainty, and doubt. Any negative headline can hit it hard.
Okay, so a unique project, high visibility, but serious regulatory hurdles and potential volatility spikes. So we've gone through the playground, the toolkit, looked at PayEU, FlowKai, HBRR, WLD. It's crystal clear that tackling these high-risk crypto opportunities, even with a smaller budget like $5,000, absolutely requires a strategic approach. Using these parameters we talked about, volume, narrative, tokenomics, charts, sentiment catalysts, this seems crucial. Really understanding the why behind potential price moves seems like the key to making smarter, faster decisions.
Absolutely. And the sources really drive this home. Continuous vigilance is key. That's a direct quote. Because an asset might look like a great short-term bet today.
And tomorrow.
Could be completely unsuitable, as they put it. Things change that fast. Which brings us back again to risk management. Stop losses. Careful position sizing every single trade. The market tends to reward those who are prepared and disciplined, not just those who get lucky.
That's a powerful takeaway, vigilance and discipline. So thinking about all this, how fast things shift from boom to bust for specific coins, here's something for you, the listener, to chew on. Given this rapid change, what new questions will you ask yourself the next time you see a big crypto headline? And how might understanding these vetting tools change your whole approach to filtering information and spotting potential opportunities?